If you're a veteran or active duty and you want to buy a home in Hampton Roads, one of the first questions you're going to ask, do I make enough money? And I'm going to give you real numbers for a $250,000 VA loan in 2026. Actual math, no guessing. So make sure you stay with me. All right, let's start with what you're actually paying for every single month. On a $250,000 purchase with a VA loan, there's a funding fee for a first-time user, which is about 2.15%. That's $5,375. Now, most veterans are going to actually finance this into the loan, so your real loan amount is $255,375. At today's interest rates, around 6.5%, your monthly principal and interest is $1,615 a month. Now, you got to budget taxes and you got to budget insurance. So for taxes, let's say $200, homeowners insurance, let's say $120 a month. Now, your total monthly payment lands at about $1,935. So let's just round this up for easy access at $2,000. That's the number we're working with, and that is everything I'm going to show you. VA qualifying has two parts. Most lenders explain the first one. The second one is where deals quietly get killed and nobody tells you until it's too late. Part one is your debt to income ratio. Now, VA's benchmark is 41%, but there's really no limit to the amount of debt to income you have as long as the loan works. But for the sake of this video, we're going to use 41% for qualification. That means your income shouldn't go over 41%. So how do I figure out the math? Take a $2,000 a month payment. If you have zero other debt and divide that by 0.41, you need roughly $4,880 a month in gross income. That's about $58,500 a year. Now, add a $400 car payment, your total debt is now $2,400. Divide that number by 0.41, and now you need $5,850 a month, around $70K a year. You see how fast that moves when you carry debt? Now, part two is residual income. Write that down, residual income. This is VA's built-in safety check. After all your debts are paid, they want to see the specific amount that is left over at the end of every month for living expenses. Now, for a family of four in this region, that number is $1,003 a month. Pay attention, because here's the part that matters. If your residual income is strong, VA will approve a loan even if your debt to income goes above 41%. That's not something most buyers ever hear about, and it honestly saves deals multiple times. Now, here's where it gets really good if you're active duty or receiving VA disability. Pay attention to this first part. If you're receiving BAH, it counts as a qualifying income. But again, most lenders forget to tell you the most important part about BAH. It's not taxable. And because it's not taxable, lenders are required to gross it up by 25% when calculating your income. Stop and think about what that means for a second. If your BAH is $2,400 a month, it doesn't count as $2,400 a month. It actually counts as $3,000 a month. That's a $600 difference in changes of what you qualify for. I've seen veterans walk in thinking they didn't make enough, run the numbers with their BAH grossed up, and they cleared the requirement by a whole margin. They almost didn't even apply, and that was stopping them. So for an E5 with dependents here in Hampton Roads right now, BAH runs between $2,400 and $2,600 depending on your zip code. Grossed up, that's $3,000 to $3,250. That alone covers a huge portion of your qualifying income. VA disability works exactly the same way. Non-taxable income grossed up by 25%. I've had VA clients on VA disability with modest base pay qualify for a $250,000 purchase without breaking a sweat. It's honestly one of the most misunderstood parts of this entire benefit. So I just want to take all this and put it together for you with a real scenario so you can kind of see how this plays out. Active duty E5 in Virginia Beach, base pay around $3,600 a month. BAH with dependents around $2,400 a month. Gross all that up to $3,000. Now your total qualifying income is $6,600 a month. One car payment of $350. Well, now your total monthly debt with a new mortgage is $2,350. Divide that by $6,600. That's a 35.6% debt to income ratio, well under that 41% benchmark. Residual income after all debts cleared, $1,003 easily. Veteran qualifies, no down payment, no PMI, and now they're building equity from day one of owning a home. Now, there's three things that trip people up, and I want you to know them going into this process. Credit score. VA doesn't have a set hard minimum for most lenders. However, we typically want to see about a 620. Some go lower. I would always call and ask before you assume that you're out of qualification, because you might realize that you actually qualify. Another one is too much debt. If car payments, student loans, credit cards are eating into your income, man, that's a fixable problem. We run the numbers and figure out what changes need to happen before you actually apply. A short work history. VA wants 2 years of stable income. If you just separated from service and started a new job, timing matters. There are ways to work around it, but you need to know early. None of these are dead ends. They just need to be planned around. So if you're in Hampton Roads and you want to know the exact numbers, the conversation is free. It takes about 20 minutes. I'll run your actual income, your actual debts, and tell you exactly where you stand. The link is in the description. And if you're watching this and you know a veteran who's been sitting on the fence thinking that they don't qualify, share this with them. They probably do. Also, make sure you subscribe for more videos like this. I'm Daniel Solis, and I'll see you on the next one.